Everybody, we are going to talk about Lemonade, not the drink, the insurance company. They just reported their earnings a couple days ago, and after an initial drop, the stock has been doing really, really well. It was up 15% today on the day I'm recording this. I'm recording this on Thursday, February 27th. It really turned around. It's doing really well, and the numbers look pretty strong. Before we dive into the numbers, please take a minute and check out the link you see on your screen, fool.com/Frankel. You can get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing, and I'll put that link in the description as well. Again, that is fool.com/Frankel. So let me share my screen real quick. This is from Lemonade's latest shareholder letter, and the reason for the initial decline in the stock was most likely because the guidance going forward was a little bit light. Not enough to, in my opinion, really warrant the stock dropping, especially when you consider some of these numbers. In-force premium grew 26% year over year. That's the total premium of all the policies that Lemonade currently has. The average customer is spending 5% more, over 2.4 million customers. And you can see not only was that growth impressive, but it is accelerating. It's really nice when a growth curve has kind of an upward inflection over time like this one does. You can see, so this is the past 2 years of comparable quarters at the end of 2024, at the end of 2023, and the end of 2022. And profitability is improving. So the bars to pay attention to are unfortunately the ones with negative numbers. This is adjusted EBITDA. This is net loss. That's the GAAP number right there. But you can see over time those losses are narrowing. The fourth quarter 2 years ago, negative $52 million in adjusted EBITDA. A year ago, negative 29. Now it's negative 24. And the business is cash flow positive in certain ways. So on an adjusted basis, operating cash flow was positive, adjusted free cash flow positive 27 million. And those were negative the past 2 years. So that's really impressive profit improvement. I'm going to talk about what led to that in just a second. But here's adjusted gross profit of the business. Their adjusted margin went from 12% to 20% to 29%. So really impressive. So if we look at this, and here's really why the business is doing better right now. It's this loss ratio. Lemonade's never had a problem with growth. It's had a problem with making money. So as an insurer, you make money by two ways. You make money by investments, which Lemonade, we'll get to that in a second, and you make money from underwriting, meaning that the money you take in from your customers' insurance premiums should be more than the money that you're paying out in claims and spending on the business. The money that you're paying out in claims is known as the loss ratio, and Lemonade targets to keep that under 75%. Now, this was a seasonally strong quarter for the business. The California wildfires are in the first quarter, which the company does address that in this letter. So that wasn't reflected here. But with all that in mind, you can see the gross loss ratio for the fourth quarter was 63%. That was Lemonade's best quarter ever in terms of loss ratio, way under the 75% target. But the more important number is the trailing 12-month, meaning what they did over the past 4 quarters, because that includes some quarters that are not seasonally strong. And that came in at 73%, still under the 75% target, and 12 percentage points better than the prior year. So that has been continuously improving. That is, in my opinion, the most important part of this earnings report, and is likely why the stock is going higher today. Some of it might be a short squeeze. A lot of short sellers might be covering because they saw these results. But generally, everything's heading in the right direction. It's going to be a little while till it's profitable on a GAAP basis. They have a high stock-based compensation and things like that. But generally speaking, this was a very, very good quarter. Let me go ahead and go down to where they talk about some of this other stuff. So here's the loss ratio over the past 4 quarters over time. So the past 4 quarters, I said right now, it was 73%. That has steadily declined since mid-2023. They've done a great job of improving that kind of profitability over time. Hopefully that will continue. And really, really just good numbers all around. They did a big spotlight on pet insurance. This is on Lemonade's investor relations website. So I definitely encourage you to give it a full read. It's definitely worth it. Here's the California wildfire discussion that I was looking for. So the California wildfire, obviously, these are situations why insurance companies exist. The whole point of an insurance company is to take a risk off of one entity and put it on another one. In this case, taking risks off homeowners and renters and putting it on an insurance company, Lemonade. So the company actually did pretty good when it comes to their monetary impact of the wildfires. You can see right here. This should be reflected in the first quarter numbers when we get those. That should come out in April at some point. About $45 million in gross losses. It should impact that adjusted EBITDA figure by about $20 million. And this was just a small part of Lemonade's book of business. Homeowners insurance is not a giant part of the business. Renters insurance, pet insurance, that makes up a big part of the business. Car insurance is becoming more of the business. And you could see right here that if the book had been less diverse and they hadn't taken steps to manage their exposure, the impact could have been 5 times greater. So they're getting out of the situation very unscathed, relatively, and very nice comments from their customers right there. So they're doing a good job of not only being a good business but being a good partner to their customers. So this is the 2020 or the future guidance. Remember, Lemonade's priority has been profitability but growth at the same time. They're kind of ramping up growth, but they are expecting their second consecutive year of positive adjusted free cash flow in 2025. And they expect to achieve that going forward. It's going to be a little while longer until they get any other type of profitability metrics in the right direction. Adjusted EBITDA profitability is next, and that should be at the end of 2026. So the guidance looks great. They're expecting to grow their in-force premium by about 20% this year. That's a little less than the market was expected, but I'm totally fine with that. Stock-based comp I mentioned is a little on the higher end, but I'm okay with it if the business is performing well. CapEx, common shares, that is the dilution from the stock-based comp. But yeah, everything's heading in the right direction. Positive cash flow. Can't complain as a shareholder. I'm not adding to my position at these levels. A lot of people have asked me if I'm a buyer of Lemonade right now. But not at these levels, but I definitely like what I'm seeing just because I invested in Lemonade a long time ago and have it in my portfolio. It's a relatively small position for me. You can look through all their profitability metrics. Like I said, we're a ways off from the actual net loss becoming positive. Adjusted EBITDA becoming positive would be great because that pretty much just gets rid of the effect of that stock-based compensation expense and things, which isn't a cash expense. So it would be a better metric of how much the business is actually making. Of course, stock-based comp it's a cost. It's just not a cash expense. So eventually you do want to see the company become net profitable. And it got a ton of cash on the balance sheet. Cash is going up. Now that they're cash flow positive, we don't have to worry about that number drawing down. And that lets them invest and earn some money on that. Assuming that's just invested in like treasury bills at 4%, that's a $40 million income stream right there. And as this cash builds up over time, which hopefully that will accelerate, its investable capital will increase as well. Let me know what you think about Lemonade's quarter. Like I said, I'm happy with it. I'm not exactly buying any more of the stock right now just because I'm comfortable with the position I have now. I'm not selling it either. But all in all, this was a very good quarter. Management's doing exactly what they said they were going to do, doing a much better job of managing risk than I thought they would. And I'm really happy with what I see. Thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.